let's get going. Busy morning. How are you today? Yeah. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Oh, here we are. Huh? Oh. Is that a little better? All right, so good morning. My name is Wayne. I will be your guide today. Please ask questions. Type them in the chat. I will do my best to see them. The thing is, you'll ask a question and I'll speak for 10 or 15 or 20 minutes. And while I'm speaking, I don't look at the chat because I can't do two things at once. I can do one thing very, very well, and I can't do anything else. So, like those that are dyslexic, they say they're ambidextrous. But you're not ambidextrous. You're dyslexic. They always get it mixed up. I can only do one thing. So you'll ask a question, and if I see it and I like it and I grab onto it, I will give you a great answer. Hey, my keyboard is broken. See, I can't do two things at once. I'm missing a key. What the heck? It's a very expensive keyboard. Sorry. My Razer keyboard. It's missing a key. Who stole my key? Anyways, so I'll do my best. I will answer your question. Technical, fundamental, trader psychology, it's all there. Sometimes we just talk about the business of being in the business. Happy to do all that. Just let me know. You're the guide. You're the boss. I'm the servant. So just let me know how I can help. I hope these live streams every day for the last 20 years have been helpful. Additional resources are available in the description below the video. A link to my book, Strategic and Tactical Forex Trading. A link to my community, fxbootcamp.com. A link to free training resources on the FX Bootcamp YouTube channel. And a link to tradersway.com, an ECN that offers straight-through processing, which means they don't trade against their clients. They execute your trades directly into the interbanking system quickly, affordably, and they pay you your swaps. The swaps that you deserve. They don't skim off the top. So, tradersway.com. Hey, is this live? I hope so. Are you live? Let me take a look at the poll. Last chance to complete the poll. 5, 5, 5, 4, 4, 4, 3, 3, 3, 2, 2, 2, 1. Kick busted. Doom, boom, 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 boom. All right. Okay. Do you see the change in China COVID? Well, yeah, that's going to impact the currency markets for sure. Okay, so looks like most of y'all are interested in Great British Pound, followed by Aussie. Huh. Why are you interested in the pound? Why not euro? Okay, why euro? What would you be trading? Is it safe to say the dollar has peaked? No, but you could trade that for sure. Is it safe? I don't know, but is it tradable? Yes. Okay, come on, guys. Actually, give me the pair now, because I'm curious. You're picking, okay, pound. Why pound? What are you trading? Pound what? No, let's do pound. So like somebody said Aussie dollar. Okay, it's mediocre. Okay, that's okay. Pound yen, that makes sense. It's funny, some people are being blocked for typing pound yen. It must be a bad word somewhere. Okay, so you're trading yen pairs. Okay, interesting. You're not, okay, that's interesting. Well, then let's zip over there and take a look at that. And, okay, so you're not trading the dollar. Okay, okay. Okay, okay, I guess. Okay. All right, I mean, obviously it's moving. Okay, great. Let's take a look at where we are. I'm going to measure the new top because this is an old buy zone. Oops, that was from yesterday. Okay, this is the old buy zone from before, as you can see. All right. Then we run into a selling pivot and we move into sort of the new world. New world order. And so now you're left with the question, does it continue its way down? So to move into that next wave, you're going to look for something like this. Okay, but notice that of this prior move, so let me change yet again a different color. Somebody's going to look at it like this. Okay. Anyways, let me move this. Let me move things around, see what people are thinking. Okay, it's about the same as you probably know. There's this old thing here. So yeah, it comes down to your bias and your time frame. So like on daily. Okay, if you go on to the daily, can you see that this could, for someone, be simply a 3A2? Yeah, Cranky Bit says USD has fallen 4% in 2 days. People want to trade pound yen. Okay. Okay. Anywho, isn't that interesting? What do you think of this area? So for someone trading the daily chart and trading sort of post craziness of the political problems in the UK, there's this radical comeback and now a very significant pullback, and might be approaching somewhat of a I don't know if you're going to reload into somewhat of a buy zone. But pay attention to this. Look at this. Bottom, 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 50% pullback. So it's not that it would happen, but somebody is probably thinking like this. Ahmed says, how would I know if the bearish bias on pound yen has been breached? Well, it's got to hit support on a long time frame and then reverse on a short time frame. Hua? Now, the other support area that could also produce the support you're looking for is kind of this thing here. So that's kind of the counter play, and that's how pivot points work. It kind of sees that. If you were a bull, okay, you're going to look for plan A is kind of in the zone we're at now. So let me actually redo that zone. Let me redo that since, okay. So hang on, bear with me. Bear with me, bulls. All right. There's a plan A here and a plan B here for bulls. Okay. That's how you'd put that together. What changes in fundamentals to consider a change in bias? Good question. Let me get that for you. Un momento, por favor. La la la. Ha, ha, ha. Hang on, I'm logging in. Boom, boom, boom. Boom, boom, boom. Boom, 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 boom. You are not alone. Hang on, hang on, hang on, hang on. It's just loading. It's a lot of data. It's thinking. Think, Pooh Bear. Think. There we go. Remember, this isn't a web page. This is a database in the cloud. All right. So like we can go to pound yen. Okay. And what would you look at fundamentally was the question. Well, we look at, oops, let's do this in pink, GDP. Oh, and I got marker for some reason. There we go. Okay, we'd look at GDP, which is growth, inflation, which are prices, unemployment, and interest rates. Okay. You'd want to look at seasonality. You'd want to look at institutional sentiment. You'd want to look at retail sentiment. And you'd want to look at trend. And you'd want to do that for the Japanese economy and for the British economy. Okay? Score them and rank them and make a decision on buy, sell, or hold. Okay? Okay? Pretty simple. What do you think? It's pretty, right? So it says sell. Actually, I can bring it back here for a second. Okay, it says sell, but I can go back in history and check it. Oops. Okay, and it's only recently become a sell. Okay, pound yen has dropped 1.23%. Nice. Okay, so it's only recently been a sell because of many things, but one of them could be like this technical change here. So over time, it's looking at the highs and the lows, calculating the mean. That's not quite right, is it? Calculating the mean, which is probably in here. Okay, calculating the slope of the mean. And then from that, projecting into the future, continuing its slope. So you can see I have the slope kind of wrong, and the slope is more like this, huh? And then calculating the standard, the variance, and then from that square rooting the variance to get the standard deviation, and then doing linear projections of the slope of the mean with the standard deviation projected 7 days in advance. See? Simple! And it says, so. And it's gone from bullish to bearish recently because of the change in the trend, but also look at the change in the retail sentiment. Okay? Look at the neutrality in institutional positioning. So things have changed. Things have changed, you see? So it goes back to the question, what changes do you look for in fundamentals to consider a change of bias? Just that. Can I look at SPX2? Okay. Global stock indices? Sure. I can do DAX if you want. I can do Nikkei. I can do FTSE. Can I do S&P 500? Uh-huh. Okay. Institution is not long. It's not ready yet, but you got to be careful. Doug says, hey, great conversation last night on oil. Thanks for talking about it in such detail. My pleasure. I think it's an important gauge, a bellwether, a canary in the coal mine for the global economy. So I think it's very interesting. So I appreciate that you appreciate it. Morena's got 500 pips profit on pound yen sell. Awesome. That's how you do it. Good job. Now to get it, I might disagree with the initial entry. Most likely, right? Or wait, no, you're in at 68, 69, 168 or 169. Okay. I'm going to assume Morena's, because she's a great trader. She's been around. This is not her first rodeo. So I'm going to assume she's in right in here. And that would be just absolutely beautiful. So take a bow. That'd be about right, what she's saying. That's really cool. Oh, really? Audio? What's wrong in my internet? Let me check which internet I'm on. My business internet has been a problem. Yeah, see? So it drops, and now I'm on the other internet, and it's slower. Hang on. Oh, yeah. Yeah. That should be enough, though. Should be enough, but that's clearly not my business Wi-Fi. Well, I apologize. It is, we're going through a hurricane right now, which means it's horrible. I can't go outside and smoke cigars. Sucks. I was outside the other day, and I'm like, I'm talking to my wife, and I'm like, I hate it out here. It sucks. It's miserable. It's cold. It's wet. I can't think. I can't sit. I can't enjoy the warm sun. I can't smoke a nice cigar and contemplate the beauty of life. It's just horrible. And she said, you sound like a grumpy old man. You should just be happy and grateful for what you have. It's a beautiful autumn day, and you should notice that. And I said, shut up! Oh, baby, I'm sorry. Please forgive me. All right. All right. So anywho, here's the old man rolling, right? Easing into a hot bath. This is that definitely that kind of rollover stuff. Yeah, don't ask, Lucas. Don't ask. Yeah, yeah. Yeah. All right. So, yeah. So, mark the range. Mark the range. Okay. You got a range here. We've already marked this one. Okay. Obviously a giant breakthrough. Can you sell at support? Can you sell at support? No. Nope. A bull could buy it, but here's my guess. Bulls don't buy it. I mean, they could, right? But I think you get some profit taking and then bears re-enter. Okay. I think that's how that's going to go down. But a bull is going to try for this. Okay. So just try to figure out which one that you are. Find the time frame that feels right. Okay. So for example, let's say you want to sell this. How do you do it? Is that a fair question? Okay. You look at this. Okay. You look at this. And if you're a bear, this is how you sell it. So I've been asked a couple of times, does the easing of COVID restrictions impact currencies? Well, it would be indirect. You have to ask yourself, what impacts currencies? Well, global trade. So, your real question is, will removal of restrictions in China impact global trade? Will China economic activity increase? Will people go back to work? Will factories restart? Will shipping restart? Will personal consumption increase because people are going out to restaurants, people are going to the mall, people are fixing their houses after spending 2 years in them? Is there economic activity? Then we have to say, what kind of economic activity, if there's an expansion of the economy in China, what percentage of that expansion will include the demand for foreign goods and services? How much iron ore and coal does China need outside their own supply of, their domestic supply of iron ore and coal? How much foreign iron ore and coal will they need for the production of steel? How much gold? How much copper? How much cobalt? How much oil? How much natural gas? Beyond all their own domestic supplies, how much foreign stuff will they need? And if they need foreign stuff, that's called trade. And when China trades with the world, you use the foreign exchange market to conduct the transactions. Because if China says, hey, we're short on iron ore, so let's buy some Australian iron ore, they have to go out into the interbanking system and buy the Australian dollar so that they can use the Australian dollar to buy Australian iron ore. Then they need to hire a ship to carry it from Australia back to China. So you can look at the Baltic Dry Index. Okay? As may be evidence that that process of trade has begun. So just for fun, why don't we take a look? Baltic Dry Index. Let's take a look. Trading Economics covers it now. Very nice. Very nice. Nice. All right. So there has been a slight stabilization. The bottom of the market seems to be the end of summer. There was a rally, and then we gave back. And right now, maybe a stabilization between 1,000 and 1,500. This is the price of hiring the ships. If nobody's hiring the ships, nobody's buying iron ore and coal and other dry goods. Okay? And you're like, okay, over the last 5 years, you can see September was the lowest. Going back 5 years, September was 1,000, but the bottom of COVID, check this out, was 500. Post-COVID, when we ran into a supply chain problem, this went all the way up to 5,000, 5,500 from 500. Prices were really, really high. There were no ships. So of the ships that were willing to pick up your goods, you had to pay a lot of money to get them to work for you because there just wasn't very many ships. Okay? That's what happened around the time of the financial crisis of 2008. It went as high as 12,000. Okay? And so now we're at 1,500. It's pretty cheap. Okay? It's pretty cheap right now. So you could probably argue that there isn't a lot of demand for commodities because demand is down by 51% this year. 27% in 1 month. But this could be an interesting sign for you to watch. Evidence of it going from 1,500 to 2,000 to 2,500 to 3,000 might be a game on for Chinese economic activity. Now, I'm going back to the initial question. Does China removing restrictions impact the currency market? It's what happens. So The answer, the basic answer is yeah. But the real answer is, well, that depends. If they have domestic stockpiles of oil and gas and iron ore and coal and wheat and pork, okay, and gold, then they won't need international supplies. So it is possible that they remove restrictions and nothing's happened, okay, because they've been saving. Let me give you an example. China's purchases of oil is down by 2 million barrels a day. So what if they've been buying oil from Russia and just stockpiling it? They don't need it now. 2 million barrels a day, down from normal levels. So what if they've been saving 2 million barrels a day? Well, when they get back to business, they already have a bunch of cheap oil. They've been buying Russian oil. Cool. They've been buying oil from Darfur. All right, so you got all this cheap, Iranian oil. So they're like, yeah, well, we've stockpiled. We planned for the reopening, so we don't need any oil. And maybe it's not inflationary. I think that's too basic. I mean, it might be correct. The basic assumption right now by, news analysts are like, soon as China opens, we're going to have a huge rally in everything. I understand that, and it's not wrong, but it's not necessarily correct. Okay, so there's the long answer to the complicated answer to your simple question. Okay, cool. Mm-hmm. Cool. So, by the way, the link to that fundamental service that I just showed you where it said like 2 or 3 days ago to sell pound yen, I posted that link in the chat. It's still not officially launched. Okay. There you go. So there it is. Baltic Dry Index, everybody. How many YouTube gurus are going over the Baltic Dry Index to explain the supply and demand of commodities and currencies, but also the relative health of global trade? Now, it's a loaded question because I don't think anybody does, but I actually don't know. I mean, I honestly don't know. So I'm actually kind of interested. I've been using information like this for, 15 years probably. Okay, look at that. Iron ore prices are down today. Yeah, that's why nobody's buying them. Now, one interesting thing I was reading about yesterday is the iron ore ships are now carrying coal instead of iron ore because there's so much demand for energy. All right, so I want to go over to commodities. Okay. I want to look at this. Let me go zoom in. I had a little trade on here yesterday. It was pretty funny. All right. Looks like I got out at BE. Nice. The lower low projects the lower high. That's how you use Fibonacci, by the way. Another way of looking at it is this equidistant? No. Is this equidistant? No. Channels, standard deviation, equidistant. Okay. You connect this low with that low. Okay. And then you create a parallel channel, if it will let me grab it. Here we go. So as soon as you get the lower low, this is what I'm trying to say. As soon as you get this lower low, which may or may not be predictable. The point is, I'm not trying to say that you should be able to predict that. What you should be able to do is notice it. And as soon as you get the lower low, so again, you see that that was the low, this is the current low, then you should set up a lower high trade. This is an example of what we call a hammock. Now, hammocks usually occur after double tops. They're even easier to spot. But a higher high followed by a lower low is not a bullish pattern by any means. So what you do, and you know, of course, you might be thinking, oh, there's a little bit of hindsight in this. Yeah. You just turn that negativity off. Don't worry about it. The lower low predicts a lower high. So how do you predict where the lower high will form? That's what Fibonacci is for. You say 382 to 618 is the new sell zone. It came back 50% and has dropped like a rock. And that's technical analysis. That's it. Okay. Okay. Interesting. So what's another way of looking at it? Okay. We had a big bearish move, one bullish day. You could have your chart set up like this. Let me show you. One of the things I like about my biased pivots is you have to declare your bias. It's the most important thing. Okay, so you do something like this. Watch. You look at swing trading bearish bias. No. Day trading bearish bias. So let's say, even though yesterday was an up day, you're very much a bear on Bitcoin. I think you can agree that that's reasonable. So we take a look at this, and do you see how it works? This, we knew, let's say last night, this was the Asian session in here, that this entire area was today's sell zone. Okay, it's predictive. It's not backward looking. This is not lagging. It's already calculating Monday's sell zone. It's a little early to predict it, but it's calculating it. And I'll give you an example. Okay, there's the aggressive target. Let me go into the indicator and add the conservative target as well. Done. I'm going to save the template, by the way. Template, save template. This is bearish, isn't it? So day trading bearish bias, day trading bearish bias. So we have both targets. Replace the template? Yes. Okay. So here's what we knew 5 o'clock p.m. Eastern time yesterday. This was the sell zone if you're already a bear. Okay. So let me put that back. There's the sell zone. And today's target is right here. So now all you have to use is technical analysis. Now, that is technical analysis, but you'd have to say things like, okay, that Asia produced a lower low. London boys are going to sell a lower high. Use some Fibonacci, and you're like there. And now the next move is going to be here. New York boys take it down. That's how you trade. That's the psychological aspect of the technical analysis. You were already a bear. Now, if you ask me, well, how do you know to be a bear? That's the piece of information that you are lacking right now. If you don't know your strategic bias, that's the problem you need to work on. Because you either stand for something or you'll fall for anything. And that means you'll just be chasing price all the time. You'll always be late. Okay? A strategically biased trader waits for the sell because they're already a bear. So you not trade for a whole day. Can you imagine it? Can you imagine that? Okay, and you're probably trading off of a 4 hour, not a 1 hour. So look how easy this actually is. Okay, 4 hour 21 off the daily M3, which is the most, right? The most obvious daily selling pivot. Okay. All right, look at the reaction here to the FTX news, huh? Thank you, Burned. There you go, eh? Oh, for show. Just like that. Nonetheless, look at this chart. Okay, look at this chart. Let me draw some of the trend lines that are here. There's a trend line here. There's a trend line here. And then there's a dotted one in the middle. Okay. Now, that's the same calculation that my super secret fundamentally based alert service uses, but it uses technical analysis to check the technical trend because obviously that matters. These moves recently are so dramatic that it's even hard to calculate them. But on a 4 hour, you can see. Sammy's gone. All right, well, good luck, fellas. Go ahead and trade the craziness. All right. All right, so this is the post news from yesterday. Okay. Oops, now I got to change this back to yellow. Down. Up. Enough said. Okay. Enough said. Enough said. Okay, let's take a look at, let's use this setup for gold. How do you trade gold? Let me try to explain it this way using the English language. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. Now you might want to do a further analysis. That's pure price action. But along the way, you probably want to look at this, because any Elliott wave person will tell you that there needs to be a 3-wave correction. So at some point along the way, you would expect something that kind of looks like this. Maybe, 1, 2, 3, and then back, right? But it doesn't have to, of course. Lovely, right? Yes, you're smelly, with your smile so worn, and your teeth so green. All right, let's see how the exotics are doing. Ooh, ooh, oh, oh, hey now. Huh? Oh, whoa, whoa. Oops, no, I meant this one. Ah. Uh-oh, SpaghettiOs. Uh-oh, SpaghettiOs. Yeah. All right. So anyways, a little pullback there. See, we'll see if it, yeah, interesting. I think you can figure out what was going on, huh? What's going on? Nothing's right, I'm torn. So anyways, trying that. She says maybe over leveraged positions in well, you know what? A lot of people just might be, it might be take profit Friday. Yeah. Could be just simply take profit Friday. Okay. For example, what are you supposed to do in here? Take profit. The pattern that's in play revolves around this entry. And that entry predicts this exit. Now, it could do whatever it wants, but that's what the chart says. Now, at the time, I have this slope down, as you can see, because the other side, like this trade is not wrong. Like this channel is not wrong. Don't look at things as right or wrong. It's analysis. This chart here at the beginning of the month shows that bears sold. It's factual. They did it. Down here, bulls bought. That's the buying price. That's the selling price. Both correct. We have market participants. That's why you get all this noise in the middle. There's a true battle. Then later we broke higher, okay, and basically knocked the bears out. And then we flip over and we use the old top as a bottom. We call that a roll reversal. Of course, we had a lot of news, so this was very much news related. So really, Not that predictable. I mean, somewhat predictable. For sure, you definitely could have been a bull here. For sure. Oh, yeah, and we certainly had talked about it as well. Especially after a breach of the channel. I mean, okay. But nonetheless, no matter what, this to this to this means out. Okay, so don't be shocked if there's at least a little bit of profit taking before either a resumption of trend or reversal of trend. What? Okay. So this whole red zone means take profit. Okay. Also notice on the 4 hour, things are quite different now, aren't they? What do you think about that? What do you think about that? Okay, one way to look at things like the projection here, you can see yesterday's closing price was 66.50. It's neutral, but the trend is strongly up. Okay, and you can get that into the price forecasting as well. The projections you can do. Okay, so it said, look, we're here and it's going to drop and then rise. And it's doing its best. Remember, it's just calculating the mean, the slope of the mean, and then doing linear projections. So it's just math, simple math. But it said yesterday, when it closed here, it said expect a down and an up. Cool. That's pretty. All right, buddy. Cool. I want to show you actually, the math said the best case scenario is it drops to 65.88 and then rises. 65.88. $65.88. Hang on. Let me just. Oops. Where are we now? I want to change this template so it's just super simple, super clean. Template. Let's just. Where is it? Standard. Simple. Okay. So we put that there. Open this up. Wait, that's not it. There we go. 0.6588, I think it was. Look at that. So what it said yesterday at the close was this is the best case scenario for bulls. And from there, it should go up. Based on this. Remember, it's not an opinion. Okay? It's not an opinion, it's just math. So the way that it did the math, and of course it probably didn't quite do the math that way, because I think it would, obviously if it said that was best case, that was probably off the mean. So it's probably measuring back maybe about this far or something, right? But nonetheless, it said that's the best case scenario by there, and it's projecting forward based on the past because it's just technical analysis. It's just doing math. But the best case worked pretty good, don't you think? Okay. Cool. Cool, buddy. But still, it's not fundamentally bullish yet, which means, here's another sort of clue. It's not fundamentally bullish. It's technically bullish. So something fundamental has to change in Australia or the United States, or at some point in the future, when this turns bearish, it's going to be a hard sell. So you might say, oh, it's going up now, which is great. And by the way, I talked about this last night in the swing trading group. Sometimes you just trade for the money. That's it. There's nothing to it. Technically, it's long. Fundamentally, it's short. Everything's neutral. But it's definitely going up. So you just do simple technical analysis. And you pick up your pennies and quarters. You pay, you're able to pay your mortgage. But it's not really what you want to do. And so you're doing that. But really, you're waiting for, like seasonality. Look at that. Oh! Something amazing is probably coming around the corner. So right now, that Aussie dollar's bullish. Oh yeah, you buy it, baby. Go ahead and buy it. Buy your dips. It's going to work now. But if you could see the future, if you can only see the way she loves me, maybe you'd understand. Yeah, if you could only see the future, you're like, okay, this is going up now. For now. But you can see, probably won't last forever. Sakla says, hey, Wayne, how do you figure out the bias for the day when trading? That's your problem. You can't have a bias for if you don't have a bias lasts for months, even years. I would certainly say for the quarter. You could change your bias quarterly, but really the true bias is set by the central banking policy. And the central bank changes their policy based on economic conditions. Okay? So your bias doesn't change every day. That's not a bias. That's not even an opinion. Okay? I mean, when there's food in your stomach older than your bias, it ain't a bias. Okay? So what you're just asking is simple technical analysis. Okay, that's just simple technical analysis. Okay, no problem. But look at that. Look at this chart that I've drawn for you. I drew it a couple of weeks ago. Is that bullish or bearish? If you can't figure that out, you need to work on now your technical analysis. Okay. So we're approaching the next move, if you will, of hitting the 200 EMA. And maybe next year or next week, you buy a dip if you're a bull. Can you guys see that as being plausible? What are the prices likely to be in play? Probably these prices. Whoop. Just using price action. I'm not using pivot points and all that kind of stuff. Okay, so I'm just saying next week might look like this. How do you know? You don't know. You need to figure out what you want to do. Are you going to do that? Then you know. How do you know it's going to work? You don't. Okay. Peter says, still bearish on the daily chart. Well, this is actually neutral. Okay. That's actually neutral. So it would be more like, see what happens up here, in my opinion, Peter. And if you're a bear and let's say it overshoots and it comes back and then you make a lower high, a lower low, lower high, at some point you get on the clue train and you take it back down. But remember, seasonality says, okay, third week of September, dollar starts to weaken. That's why we were measuring things this way in the past to discern if any of these breakouts matter. Okay. We also knew the election was going to be an important component of all of this. Okay. The Fed meeting and the election. And the CPI. I mean, it all is there, right? Okay. And for those in my day trading group and my swing trading group, I told them post-election, don't you dare only make 100 pips. Don't you dare take profit on a trade with only 100 pips. Okay. Dude, my keyboard is so heavy, it's so expensive, and I'm missing that key now. Where's my key? Dude, Razer is ridiculously expensive, and where did the key go? How could it just be missing? Like, someone came in and stole my key? I got this bright green, now blue, light shining in my face from the keyboard. Interesting. Cool. Anywho. Yeah. So I hope you're doing well. I hope you're doing great. Okay, pound dollar has hit the weekly target, but not the monthly target. So if this continues, then this is going to come across and do this for next week. You ready? 3, 2, 1. Watch that 21, Bubba. What do you mean seasonality? All right, let's talk about seasonality. How would you like to know what usually happens to the pound dollar in November, December, January, and February based on 20 years of analysis? Would it be helpful to know what usually happens every single month based on 20 years of analysis? Chesimfa, what do you think? Would it be helpful to know what usually happens? If you look at November, every November for the last 20 years, and calculate whether it usually goes up or usually goes down or usually doesn't do anything. I'll wait for your answer. If you can only see the way she trades, maybe you would understand. Robbie wants a pivot point strategy. 2 words. 1, there's a free training course if you go to youtube.com/FXBootcamp. Okay? Or you pay $88 and you join FX Bootcamp. And for $88, your mind will be blown. So bring garbage bags and napkins. That's it. Okay? Chassis. Chesim. Chesimpa. I'm answering you directly. Hello? What is seasonality? Would you? Yeah, I guess it is lagging, huh? So that's why I'll try to be patient. Would it be helpful to know? Would it? Okay, then we'll get back to that, Ravi, in a second. Would it be helpful to know what usually happens each month over the last 20 years, based on 20 years of analysis? See, there's no need for me to answer if no one's listening. You see? So you want to know? I'll show you. Here you go. Look, over the last 5 years, let me zoom in. It actually does. It's so mobile responsive, I can't even zoom in. I forgot about that. I know what I can do. Hang on. Let me snip it. Snip, baby, snip. All I want to do is a snip, 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 and a boom, boom. All right. I have a bigger version of this, but I don't want to go through it. All right. Let's do this. Should be able to zoom in. There we go. Zoom. All right. We're looking at pound dollar. The pink line is the 5-year average of what happens month. Okay? The blue line is what happens on average over 20 years of Novembers. So looking at 20 years of Novembers, what happens? Well, up, up, and up. So guess what actually happens? So gray is current year. Guess what happens? In a period over months. Oops, go back here. Okay, the 20-year average is up, up, and up. And what happened this year based on that information? It went up, and then the next month will probably be up, if it follows. Oh, so you don't know that? That's really too bad. That's really too bad. Because I just showed you also what's going to happen in January, February, March. Where were you looking? You were looking in the past. I bet you're so trained, I bet you looked left and said, what did it say last month? What did it say the month before? You're so trained looking backwards. So that's what seasonality is. What usually happens if you analyze quantitatively? Now, I've been trading with that knowledge for as long as I can remember. Now, I didn't have a cool tool like that. I just had 20 years of experience. So by the time I got to about, let's say, 10 years of experience, I was very used to the way that the markets move throughout a year. Okay? Seasonality. How does the market behave during different parts of the year? I was very used to that. I didn't have a tool. I just knew. What did I quantitatively know? No, I just called it experience. So I knew when to sell the yen. I knew when to buy the dollar. I knew when to take profit and go on vacation. I still take vacations based on when I know the market's going to go to crap. So I take my profit, I leave, I go to the beach, I drink margaritas, I smoke cigars. I'm loving life, living large, throwing the kids in the pool and playing in the waves with my wife. And it's all good in the hood because I know trading's going to suck. Okay? Now you're like, Wayne, does that mean you're a genius? No. No, it does not. It means I have experience. Okay? Now, something very interesting could be going on where you have a cool tool now that just shows you what took me 10 to 20 years to develop. Let's say you don't have 10 or 20 years of trading the financial markets. You don't have that kind of experience. Now you just look at the tool and say, oh, there it is. That's Wayne's experience. Okay? I can confirm that I've been trading this way for those 20 years. So now you look at the blue line, that's what I typically do. Now I have a cool tool that actually does it quantitatively, and you look at it and go, oh, that's what Wayne would have done, generally speaking. I can tell you what I would do with the yen. I can tell you what I would do with the dollar. Okay? But, and that's a big but. I love those big but jokes. I love big but jokes and I cannot lie. All right. But how about this? Here's something I don't know. What is the seasonality for Euro Kiwi? How the hell would I know that? Oh, there it is. This year, the 5-year average and the 20-year average. Oh, look. Technically, sell, 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 sell. Fundamentally, sell, 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 sell. Cool. Look it. Here's the interesting thing. Get ready for a flip one day, ladies and germs. This is falling, but institutions, COT data, still favor the euro over the Kiwi. So this is either going to go to a super strong sell or it's going to go back to neutral and flip the other way and take out all those retail shorts. Oh, but my point there was I'm not tracking the normal seasonal moves of Euro Kiwi. How esoteric could you possibly get? Well, now I know. I just let the quant do it. Let the algo do it. Hey, algo! Think of this. You have minions now that have PhDs in quantitative analysis. That's it. It's easy, right? Here, I'll put the link again. I haven't even officially launched it, but somebody asked me about it, about how to make those decisions. Well, you could go to Harvard for 5 years and get a degree in macroeconomics and financial management, or a couple of degrees. Or you can just pay the money, use a credit card. Okay. Manoj says, we've got 4 different USD shorts that aren't break even. Okay. I would probably stop there for the day. You're not profitable yet. Don't. I guess you could be profitable, but your stops aren't at break even. I wouldn't add risk. Yeah. I mean, look. Do you need more risk? Again, I think it comes down if you're profitable. If the next trade is basically the bank's money, yeah, you can keep trying. But I think, like, for example, let's just use the one in front of me. So I don't know when you bought and all that kind of stuff. But like, if you haven't moved your stop to break even because you bought here, let's do that as an example. The problem is you don't know how to trade. Manoj, you bought at an exit zone at the end of the week. It's pretty dangerous. Even if you make money there, that's not a good trade. The better trade is further down, right? So I look at this. The better trade is based on this zone. So you either did that in the past, okay? Or you're in here, okay? Or you're in here. Like, this is a monthly swing. Okay, this is a weekly swing. And the next move is down here. So again, like, I'm struggling to understand, like, you said something about you're not at break even. Well, if you're long here and losing money, then you must have entered a poor trade. Okay. If you're not there now, then your trade plan should probably look like this. Okay. Yeah, you mean in general. Well, see, it's hard for me to answer because I don't know what kind of trade you took. I don't know where we are in the maturity of the trend. I don't even know what day it is. I don't know what week it is. I mean, it's too abstract. It seems to me it's too simple of a question, or my answers are too complicated because, like, let's do this. We just hit a take profit zone on a Friday. Okay, great. Well, if we hit on a Tuesday, I would tell you the market's likely to behave differently. There's a different answer. Okay? So it's too simple of a question, but maybe right? So I don't know. Maybe the question is too simple, or maybe the trading is too simple. We need to add a few layers of complexity so that you make these decisions before you even take the trade. Okay. What's up, JJ? You know, that bottle of port's still on my desk. I'm looking at it. I'm like, breakfast. Anybody like tawny port wine? With a nice cigar? Not today. Not today. So this is all about profit taking. Can you be a bull long term and a bear short term? Abso-frickin-lutely. Yep. And again, QuantBox helps with that because you might be in a scenario that it says, oops. Sorry about that. Let me get that back. Sucks that you're able to accidentally change everything. What the hell just happened? I mean, it's way off. What the heck happened? There we go. I guess that's better. Yeah, I was just trying to move the window. Gee whiz. All right. So let's find something that's neutral. And I want to show you something. Actually, scorecard summary. Okay, we'll find something neutral. Okay, Aussie dollar, pound dollar. Let's go to pound dollar. Okay, let's go to pound dollar. It's neutral. So the question is, can you be... Oh, actually, you know what? Let's go back. Let's find if I can... Oops. Sorry, that's COT data. Something that's got a trend that disagrees with this. I guess USD yen maybe. Is there a pound CAD? Maybe a pound CAD. Is there any cells? Guess we could try pound CAD. I guess we're still just neutral here. In this case, what I'm trying to get to is you would be short-term short, I guess, right? And fundamentally, you just don't have any conviction. But yeah, you're trading until something turns fundamentally. So you're lacking fundamental trend, but you do have technical price action. So you're trading the price action, but you're not trading the trend. Oh, I don't know. Impulse leg, same length. I'm not an Elliott wave guy, so I don't get caught up in that. I mean, it might be meaningful, but I don't use Elliott wave kind of rule-based analysis. That this leg has to be that leg, but they are important. I just don't think of it the way that you described it, so I don't know. So WTI still doing all right. Gold still doing all right. Bitcoin resuming its downward move off of 17. I think that'll be the most interesting thing. Okay. We just had that pullback based on the FTX news and immediately rejected off. So now we'll, there might be some trades there for you if you're interested. So I guess I'll leave you to it. It's a Friday, man. It's a Friday. Lots of things going on. Okay, so just be careful. Look forward to something good next week. Probably we'll get some sort of trend, which is nice. We got through it alive together, so I appreciate you in my life. Wednesday, we had FOMC. Friday, we had non-farm payrolls. Tuesday, we had the elections. Thursday, we had CPI. Oh, my God. That was... right? That was an amazing week. And I'm really glad that we did that together. There was a lot of craziness. It was very wonderful to spend that time with you. I hope it made a difference in your trading. To stay focused, to stay calm, to stay collected. Right? That right? I hope that makes a world of difference. So go have a wonderful weekend. Get a couple more trades in, but don't do anything stupid. Remember, many things are at profit target levels. For those that are in my live groups, I taught you how to front run all that news way in advance. So just think of some retail trader logging in now, buying things at exit points. They're like, oh my God, look, the dollar's weak. I should sell it today. And for lack of a better word, that's pathetic. Yeah, that's not the way it's done. So I did my best to share the right practices. So peace on earth. May the pips be with you. May your profits be above average. I'll see you later, huh? Cheers.